Hello guys, welcome to another video of this channel. So in this video, we're actually going to be looking at ways in which you can actually fund a small business if you are in Africa, right? Funding options for small businesses in Africa. And I'll try to make this video as short as possible, right? I'll try to go through this as fast as I can. Now, before I go any further, having access to funds, especially if you are operating in Africa, is quite a problem, right? There isn't much of a kind of formalized kind of finance or financial markets here, so it's basically difficult, and the requirements are basically high. And like for many people, right? For many people, starting a business can seem to be like a big challenge, right? You have an idea and you want to kind of execute it, but you don't have the money to do it. But on this video, I'm actually going to basically show you like the available ways that there are actually ways to get the money that you need, right? Basically based on the needs of your business and the type of business that you are trying to launch, right? Now, why funding matters? Like, why does it matter to get money? As I've said, first of all, like you have to realize your dream, right? If you've got an idea and you want to see it like in action, you need money for that, right? So part of that, what do you need? You might need to buy maybe equipment for a business, right? Which is the most, I'll say, requisite ever, right? Be buying equipment for your business. If you're, for example, a tailor like this guy, you might need money to buy this machine right here. Right? It needs money. If you are this lady, you probably may need some things to make this thing. Buy inventory, right? What are those? This might include maybe the clothes that you're going to be using right here, the material that you're going to be using to actually manufacture the stuff that you're manufacturing, or the clothes that you'll be, making. Or hire employees, right? If you need some help, right? Sometimes demand can be high and you need to meet up with that. So you may need to hire a few extra hands to help you run your business. Of course, you need marketing, right? A business needs to be marketed. It needs to be, shown up there to potential clients. So marketing also requires money if you don't know, right? You might need money to hire a graphic designer to make social banners or social media banners for you, or make banners entirely for you, posters for you. Sometimes you might need money for digital marketing, running ads on Facebook, Google, and so on. All those need money, right? You pay to use those services. And maybe you might need money for expansion, right? You need to kind of grow a business. So where do you get the money from? Now, the very first place, if you're in Africa, if you want to start a business, you have to look in your wallet. So the personal savings, right? Now, the advantage for this is that here you don't have any interest, right? You're not borrowing from anybody who will charge you maybe, I don't know, a certain percentage every month, maybe for this certain period that you're going to be paying back that money, right? So that's what banks do, right? They charge you interest maybe for the 5 years when you're with or holding their money, right? And like also you have full ownership, right? As I've said, you don't owe anybody. That's your money. Then on the disadvantage side, the money is often limited, right? You don't have enough of it to run a business. Eh, As you know, like personal money is not always enough money. Personally, I do have my own business, and there are a lot of things that I want to do, especially on the marketing side of my business, right? I need to buy this, what do you call it, a light box, and it costs somewhere like in the $300 to $500 range, and basically to get the money specifically for that is basically difficult. And I know that if I invest in that, yeah, my business will at least get some visibility within the area where I'm operating. And two, that is personal risk. So the losses, you will suffer the losses. Unlike a bank or maybe an investor, not a bank you're going to suffer still because you'll be using collateral, right? But maybe an investor, right? An investor that don't ask for money back, or what we call angel investors, right? Yeah, they usually risk putting their money into a business, and they don't usually ask for collateral because they don't work on interest, right? Their returns are not interest, but their returns are based on owning part of a business, right? So we're going to be looking at in angel investors. on this list. I've included them there. But with personal savings, you risk this personal risk, right? You are risking your money. When you lose it, you're going to lose it, right? It's your money. You're not going to get it back. So we also have family and friends right here. So what we have on this, we've got loans, gifts, and equity. So with family and friends, it's like you are borrowing from your family members, right? Maybe your father, your mother, your uncle, your aunties, those that do have money, but that they can lend you. That's where another source is, right? We always do that. It's mostly in Africa. Some people get help by family, by their mothers, right? Their mother. I always see this thing on. I do watch a few Nigerian movies there, where the Nigerian mother will give the son some money, go and start a business or trade, whatever. Yeah, they get that money from family and friends, and on some cases, especially if they get money from someone like maybe an uncle or something like that, they usually want you to sign some sort of agreement, right? And if you fail to pay, this is and this and this is going to happen. And I also see those things on those kind of Nigerian films. I do watch them, and sometimes the uncle might require you to kind of sign an agreement that if you fail to pay money, they're going to possess your land or something like that. So yeah, it's always a problem, right? Especially friends, and also like payment terms, right? And what happens if you fail, right? So yeah, but this one is a little bit risky sometimes because maybe they might need collateral, right? Then we've got bank loans, right? Usually people hate these things. Trading with bank loans. Now, the banks are a little bit different than other options. Why? Because they need something to hold on, a collateral, a house, a vehicle, land, or something. But I don't think a vehicle it works now. They usually go for kind of what do say non-current assets, right? Non-current assets or long-term assets like houses, buildings, lands, and things like that. That is what they hold as collateral, right? And before again they give you the money, but they require you to have some sort of a professional way to kind of present your idea, right? Which means you have to present your business idea, whatever, with the business plan, right? I write a ton of this, right? And again, in my business, if you want me to write a business plan for you, I write that. And I've done that for clients, right? Yeah. You have to show the financials, right? If especially if your business has been trading, you're keeping proper records, you can actually take those statements there. And I think it's always good that those statements are audited, right? Because they won't just take anything that you've written on paper. And on the business plan also include what you call projections, right? You have to include financial projections, like in the next 5 years, right? Like when in the next 5 years, what will be your business making? Very, very important. And what will be your business making in terms of the sales revenue, and also like the cost that is going to incur, and how it is going to spend the money, and da 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 da. Collateral, very most important thing that I say there, that they need land and other things, right? The pros is that the money is often large, right? Banks don't just lend small amount of money, right? They give you a lot, right? Give you a lot, it's a substantial amount of money. And the cons, of course, there's interest, right? There's also like their business is interest. They give you money, they charge you interest on that money for a certain period of time, right? If they give you 100,000, maybe I'll say 100,000, right? And they charge you 30% interest rate. So 30% of that every year, which means I don't know how much there's 30,000. I don't know. 10% of that, 30,000, something like that every year. That's the interest. That's what they get, right? So that's the problem there. Then of course the requirements, as I've said, uh, you have to produce financial, what do you call this? The business documents, the business plans. You have to write them, right? And often these you need someone to write them on your behalf, and they're going to charge you. And you need to include, like, of course, it doesn't go alone. You might need you must have to kind of attach things, attach CVs, or attach the property papers, no, financial statements and things like that, and then maybe the collateral documents or whatever, right? So it's strict getting money from a bank, right? It's very strict. Now the other one is government funding, right? In Africa, governments don't work out that well, right? So guys, excuse me, I have got flu, but I'm trying to go on right here, but I'm going to make this video, right? So in Africa, basically, as I've said, like in terms of government, I think we're very, very behind. Or a few countries where maybe government funding is kind of a thing. One of them is in South Africa, right? South Africa, they have something called SETSFA, which is kind of a small business development entity. This is where some small businesses actually get the funding that they need. Um, yeah, so it works. It works well, and they also have like training programs here that you need to attend. This is another type of funding that people depend on, especially in South Africa, right? And other thing could include maybe things like grants, USID, trade investment, what. So now these are the kind of NGOs, kind of. Then we have the microfinance, right? These are small loans from for entrepreneurs and informal businesses with these qualifications. The microfinance are businesses that you find around town, right there. So those are actually also lenders, right? Now, these might require a couple of things. Of course, they might need collateral depending on like the amount of money that they hire. They might need the collateral, but some might need maybe something like your if you're working, maybe a civil servant, they might require you to have pay slips. Right? If you're working for government or whatever, they might need that. And like if you take a loan, maybe for, let's say for example, $2,000 or maybe, I don't know, 30,000 rands, right? Let me use rands. 10,000 rands, right? You take the loan, then maybe in your work you're getting paid around what, 10,000. They might take a part of it, a portion of it, right? Based on what you signed down there. So that's the good thing that they work on that. So I'll say some people, say most people that actually especially that work there, especially civil servants, I've seen most using microfinances, right? I've seen most using these guys, and they're actually good, right? Not bad, actually good. Then we have angel investors. And as I've said, like I think I said this in the beginning of this video, that these are the guys that come to a business, they see if the business has potential. But if the business has potential and and they can see that if they put their money there, you know, they're going to get their money back and plus profit. So the difference between this is that angel investors actually they want to own part of the business, right? They're not working like banks where they expect a certain level of interest, right? No, they want to be part of that business. So let's say you've got a business, maybe you are running a sort of an application or something, an application or some sort of a payment application, right? Where people use it to pay for things, right? Like PayPal, right? Um, an investor can, if they see potential, they can come to you and say, okay, fine, I'm going to give you 1 million rand, right? Or $1 million, dollars, $1 million, and I'm going to own 20% of that application. That's it. Right. So that's how they operate, these angel investors. Then we've got the venture capital. So these ones are also like the same as angel investors. Well, the difference that these actually manage the capital, right? They've got different investors in, they manage that money, and they source for businesses that have some potential to expand in the future. Usually venture capital, they usually invest in businesses that needs to expand, right? You have a business that is actually running, right? It has been proven that there's demand and things like that, and you want to expand to other countries. Venture capital is the way to go, right? They can assist you to expand to other countries and invest in those, and then they get part of your business, right? So another thing that you can use to get funds when it's in Africa or running a business in Africa is through crowdfunding, right? What do we mean by this? We're talking about donations, right? Raising donations online, right? Or GoFundMe or things like that. The rewards, right? Lending or equity, right? Anything that can get people to give you money online. So you can actually do that. And it's actually one of the most effective ways because you don't, as I've said, you have personal risk here and you don't have interest rates and things like that. And you don't have to give part of your business to anybody. But it's more like asking for help. Right? So that's the nicest thing about crowdfunding. Then we've got business competitions. Now, these ones, I'm not personally sure about them. Like, by that I mean I have no like experience with this. But I think this is when you kind of enter some sort of competitions, right? you end up some sort of competitions and like maybe hosted maybe by companies and things like that, or even investors actually. And you present maybe an idea, a business idea, right? Maybe you'll be competing with other people, and then the idea that wants it get funded. As I've said, like something that I don't have much information on this, but it happens. I think it happens especially in Africa. Supplier credit. Now, this one is basically simple, right? What you do is that you ask for inventory. So this will only work if you are maybe a trader, right? You are dealing with physical products. You're running maybe like an electronics shop, right? What you do is that you ask your suppliers, right? The people that you get your stuff from, to say, okay, if I lend me these products on credit and I'm going to sell them, make that money, give you back your money, probably maybe with some sort of interest, then I keep the difference. So basically that's how it works, right? Supply credit. So now what does funders look for? Now this will be different because you are dealing with different organizations, people and things like that. So some don't need much, right? Some might need to see this is like a business plan, right? Maybe a bank might need this, or even an investor, an angel investor might need to see this to see if there's any prospect. That does your business have a future, right? Is it something that will grow in the future and maybe make me money? Some just need maybe just to sign maybe an agreement, a simple agreement. It works, right? Market demand, as I've said, like this is what it indicates your business viability, right? Because these are the customers, right? And that's when I'm talking about market demand. What about customers? So if then customers, right, there's no business. Simple as that, right? Simple as that. So, and I think a couple of days ago, I was actually looking at a certain business proposal. I was actually kind of evaluating it, and I pointed this thing to a client. I said, "Oh, we have to show market demand, right? You have to do market analysis to highlight that there is a potential for the business to grow, right, and be sustainable." So this is one of the things that I do most of the times, and I love to do it. And I was actually doing it yesterday, right? There's certain type of business that I want to start, so I'm actually looking at the market aspects of the business, right? So if I get a signal, like in terms of the highly demanded kind of service or something like that, and that is the service that I'm going to go with, right? They need to see the finances, right? As I've said, like when you are operating, make sure that you record everything properly. And if it is possible, actually get statements for this, keep records for this, and they should be audited, right? When you're taking them to bank or something like that. And they also need to look at the management as well, right? The team is very important, right? Who you hire within your business is very important, right? Or what are their qualifications? Do they have the experience to run your business? So very, very important information. Yeah, some do look at this. So what are the common mistakes that you can make? So as I've said, like poor records, right? If you're running a business, a small business, make sure that you keep everything properly. Very, very important. Record your stuff well and keep up good records. And also, when you are doing like a business plan, don't make unrealistic projections, right? To telling people that you're going to make millions when you know that your business alone, like even the leaders in your industry, don't make that much. Right. So make sure that you give people real business projections, and also don't mix personal and business finances. This is what sole traders do, and I think I made a video about this last time. Like sole traders or small business, they usually love to mix personal and business finances. They don't separate those things. It is very important to separate those things, right? Business money should only belong to the business, right? Do not put it with your own that you're going to you should do your stuff. Arriving at my conclusion. So what I would say is that choose the funding that best matches your business and like stage and goals. As I've said, like the type of funding that you need and the channel that you're going to use to get that money, it has to match your business, like what your business needs, where you are at your business, and what type of business are you running. So, because for example, if you are running maybe I don't know a tax shop, right? Things like venture capital do not work for these things. Things like I don't know, angel investors, they won't come to you and say they want a part of your tax shop, right? So what do you use? Personal savings, right? Government grants if they're available in your country, family and friends. Yeah, those kind of funds. That's where you need to go and get the money. So yeah, guys, that's all about this video. And again, thank you so much for watching this video. And until then, see you on the next one.